Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 14th of January 2017 and we're providing our gold and silver weekly update for the week ending the 13th of January. Gold rose in US dollar terms last week by $25 from $1,172 to $1,197, having hit a high of $1,206 and a low of $1,172. In sterling terms, gold finished the week at £983. That's up £29. And in euros, it closed at €1,125. That's up €12 on the week. Silver rose by 31 cents from $16.50 to $16.81, having reached a high of $16.98 and a low of $15.41. In sterling terms, it closed at £13.79. That's up 37 pence for the week. And in euros, it closed at 15.79 euros. That's up 0.13 euros. The gold to silver ratio rose from 71.03 to 1 to 71.25 to 1. The Dow Jones closed on Friday at 19,885, down 5 points on the day, and down 78 points on the week. And the NASDAQ closed at 5,574, up 26 points on the day and up 53 points on the week. Brent crude was down $1.65 at $57.10, and US light crude was down $1.62 at $52.37. The dollar index stands at 101.18. That's down 1.04 on the week. Last week we stated that gold would be highly resistive at $1,200, and this past week proved that, as it attempted to exceed it and then fell back below. So it's important to look at what happened last week and why precious metals are maintaining their positive momentum. On Friday, there were three economic reports to consider in the United States. 1. Retail sales, which rose 0.6% in December, higher than the 0.5% estimate. 2. Producer prices. The producer price index for December increased 0.3%, resulting in a year-on-year increase of 1.6%, the largest gains since September 2014. And 3. Consumer sentiment. University of Michigan consumer sentiment came in below expectations at 98.1. These figures suggest that inflation is en route. The question is, of course, will gold rise or fall as a result of it? Well, we must also look at the equity and currency markets. There were strong quarterly earnings by banks on Friday. However, the short-term stock market momentum appears to be easing a little. US Treasuries were lower as a result of the strong economic data, with the benchmark 10-year note yield rising to 2.393%. which helped underpin the dollar. The dollar index fell just over 1 point on the week, and this supports to some extent the rise in gold. Also, the uncertainty affecting the Trump presidency must come into play here. For every supporter there is a detractor, and despite various tweets from the president-elect himself, we are not really much further forward with regard to his precise economic policy intentions, save that he wants to increase jobs and stop China manipulating markets. This has led to some monies moving out of equities and into precious metals, though this is not a major move so far. Technical analysis doesn't help much either, as charts tend to show that should gold reach and hold the 1,210 level, then it could quite quickly move up to the 1,250 level. However, should it fall back to 1180, then 1150 is on the cards. So let's take a quick look at what the paper traders are doing. Each day since Trump's victory, investors in top physical gold-backed exchange-traded fund, the SPDR Gold Shares, have pulled money out of the fund each day. The losing streak was the longest on record, 43 trading days without net inflows. After dumping 138.8 tons since November the 9th, on Friday, gold bulls were finally convinced to jump back in, picking up just under 3 tons. We suggest and suspect that this is contingency covering, but could be followed by other traders. So our short-term view is that until Trump's policies are made clear and their impact interpreted, we may see a little further strength in gold prices. However, we wish to reiterate our general view, and that is, unless Trump tweets something to the contrary, we will see gold resume its previous downward trend. But it may indeed touch $1,220 before that happens. Silver markets rallied during the week. However, again, as we stated last week, encountered resistance at the $17 level. Technical analysis suggests that should silver reach $17.20 and hold, it may well rise quite quickly to $17.50. However, again, the consensus view is that it is more likely to break down again back into $15 territory, but not immediately. For the moment, silver is likely to move in the same direction and to a similar percentage as gold very short term. All of us have discovered it is difficult to predict prices in the very short term, but the main influence at the moment is dollar strength, which is to a large extent determined right now on the certainty or otherwise of a Trump presidency and the policies it will shortly reveal. Either way, we are neither bullish nor bearish for the next week, and wait and see what unfolds. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Our Facebook page, which is updated daily, can be found at facebook.com/illuminatisilver. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.